Thank you, Marty. It's thanks everyone for attending. It's a pleasure. My name is Ted. I'm here with Mike, Peter, and Oscar. Um,
Kind of.
we're going to start with some introductions, and then we'll talk a little about venture investing. So that'll be new to me. Hopefully, we will learn some things. Hopefully, we'll hear something controversial. Something makes some jaws drop. Maybe something funny, something laughable. I asked ChatGPT for some humorous opening remarks. Zilch, absolutely nothing. So I'll believe in artificial intelligence when they can tell a joke. I'd like to start with some fulsome introductions, if I may. So Mike, please tell us about yourself and Bullish, and then Pete will go next.
Sure. Michael Duda, founder and general partner, managing partner of Bullish. We're an early stage US-based B2C investment fund. This is awesome, by the way. I never heard of the Ivy Family Office Network till last week when one of our investors says, you need to meet Marty. And I'm like a kid in a candy store. So I'm having so much fun today. We're $100 million AUM soaking wet. We get in stupid early, as we like to say, pre-seed, seed, Series A. So we're blessed to be the first investors in Peloton, Warby Parker, Harry's, Casper. Yes, we did make money on Casper. And then up-and-comers like Bandit Running and Bubble Beauty, which no one probably knows Bubble Beauty, but if you have a 10 to 18-year-old daughter, you should, and it's probably going to be our best investment. And we've been doing it for 13 years, and I believe 94% of our LPs are high net worths or family offices. So it's great to be here. Thank you.
And am I correct that there's also kind of a marketing component to the organization that you might want to touch on that differentiates you from a pure VC?
Sure. It differentiates, probably makes it a little weird. So this is the only investment job I ever had. And I'm not a trust fund kid. My dad made $38,000 a year as a social worker or lawyer in Syracuse, New York. I come from the world of marketing and advertising. And I truly believe that people from that world, when you combine creativity with commercial business, you can unlock great results. But what I was seeing post the dot-com bust is Wall Street and procurement people were looking at marketing as an expense. First thing cut. So I remember the day, September 29, 2008, market crashed. It was down 777 points, which is funny because that's like 2 minutes now. And I wanted to quit and create something that combined marketing thinking with growth investing principles. And so here we are 14 years later. So we tend to say money's the least valuable thing we bring. We bring ability to help founders scale great companies. And we have worked with other retained consulting clients. So it's like think of Bain Capital and Bain Consulting together, where we've done things for the likes of Walmart, TaylorMade, JP Morgan, and others. So yeah, we're a little bit different, but we love the US consumer.
Peter, tell us about yourself and Polsinelli and your practice, if you would.
Great. Good afternoon, everyone. As Marty mentioned, my full-time practice actually is an IP, intellectual property patent attorney. I've been doing it for 25 years. The first Trump administration asked me to be the head of the patent office. I've done a lot of work with the government, state, and federal on intellectual property rights. I was at a big firm, Jones Day, for 11 years as a partner based on the opioid discussion this morning. I'll say that one of my big clients, for better or worse, was Purdue Pharma. At the time, Mortimer Sackler, the Sackler family was very nice. So they had a big IP patent portfolio. I never fully understood the big picture and what was going on until I saw, I think it was the HBO series years ago that was very good, but obviously tragic what was going on. Represent a lot of big companies, Saudi Aramco, Cardinal Health, was on the buy side on a lot of deals 9 years ago, 10 years ago when I turned 50. I wanted to go to the other side of the table and work with emerging growth companies, still focused only on IP. But what happened is I quickly found out working with early stage companies that all of them need capital, will be non-dilutive or dilutive capital. So I did not start hosting startup meetings. That's not my overall approach. I started hosting family office investor meetings and I currently represent around 10 to 15 families. That includes a lot of different things. Most directly for me is we represent their legal interest, of course, which can be litigation or elsewhere. But for me, I see so many deals. I've been friends with Marty, very good fortune. I see so many deals, and I come to these meetings to see new deal flow, like AngioSafe that spoke yesterday, Richard and his opioid, non-opioid company. Both those companies are going to be very interested to share with families, and that's why I'm here. Separately, the last thing I'd say is I mentioned to Jeff, who just spoke and really enjoyed his conversation. I was in military, so my way of giving back is working and protecting the country's intellectual property. Last 6 months, I've traveled to Austin, Texas, Utah, Silicon Valley last week, Boston a few weeks before, and looking at the country's intellectual property. And that's another source of deal flow and where the government is investing money. And as we get into the panel today, I'll give you an idea of some of the deals that we're working on from a government and a private standpoint. But very nice to be here today. Thank you.
And maybe just a little on Polsinelli's footprint.
Oh, yeah, I guess I should talk about the law firm. So law firm has 1,000 attorneys, 25 offices, main offices in Kansas City, although we are in New York. In my intellectual property group, we have 160, and we cover all bases from obtaining patents in the United States and internationally. I got some patent deals I can mention to you. And then just a lot of healthcare work. Fred talked about some healthcare work, and we're obviously a lot of stuff going on in the real estate area. But it's a New York name, Polsinelli, but we're really based in Kansas City.
And Oscar, please, something about yourself and
Yes.
GD Ventures, if you would.
Yes. Hi, everyone. Mari, thank you again for the invitation and happy to be here. And I wish I was in New York City, but here in Boston, connecting remotely. So telling you about GD Partners and what we do. GD Partners, we're a venture capital firm, an emerging venture capital firm here in Boston, focused on life science. Why? It's because I've been in the life science for about 23 years now. And initially, when I moved to Boston about 23 years ago, when I moved was with the intention to start working at the hub of innovation where new startup companies bring devices to the market. So I joined a robotic company back then that got a successful exit of $1.1 billion about a decade after it launched. And that early traction gave me the motivation to continue in the space of early stage companies. So back then, in parallel of me being in that team, I founded a consulting firm, which I still run. We have many consultants, and what we do is help companies bring devices to the market. So as I was doing that, I was coming across companies that I thought were good investments. So that led me into started investing in companies. Initially, it was personal investment, and that grew into the firm. So we currently have 5 members on the GP, and we are all we have different backgrounds. I'm an engineer by education. I've been mainly in the medical device space, but we have IP lawyers in the team. We have also business and engineers and microeconomics and venture experts. So our focus is life science because we understand it. And another thing is because we have a good deal flow. The pipeline that we have initially was provided because of my exposure into the industry, providing services to many startup companies, but also I'm heavily involved in the academia, currently serving as a part of the judging committee in the Harvard Business School, Angels of Boston, and also the new venture competition at Harvard Business School, and similar programs at Stanford and one of the accelerator programs, Emergence program. So the deal flow comes from the academia and also my exposure to the field. We have many deals that we are evaluating in our first fund. We have 11 currently out of over 200 that we have evaluated. So it's a very interesting times and very interesting discussions that we're going to have here. Another thing that is part of my background, when I said I moved to Boston, I come originally from the Dominican Republic. I come from a family office in the agriculture space. we're one of the largest cacao producers in the Dominican Republic, and we still do. I'm the third generation oldest, and that's still happening. But when I moved to Boston was because I want to go deep into a particular area which I enjoy a lot, and it's life science. And but that's part of my background as well. So happy to be here and go deep into the discussion.
Thank you very much. Pete, when it comes to for family offices to invest into venture capital firms, what type of infrastructure do you think those families need to properly make those investments?
So the families that we work with, let's say some are more sophisticated than others. As Jeff mentioned, I think he manages 8 billion. There's some, even in my building, that are manage more than 100 billion, very sophisticated teams of attorneys and investors like Michael, yourself, and Oscar that are seasoned veterans in the business, and they're looking at deals in the United States and internationally. And then we have others, with all respect, that are more several 100 million, not to minimize that at all, but that are less sophisticated, that do kind of more direct fund investing. I asked Jeff what funds he was considering investing in because I have a lot of groups coming to me for capital. So one group, if you look at Interlagos Capital, they have a $400 million fund, but their team is someone that I think a lot of families are interested in. I made intros. They have former SpaceX and Starlink engineers that were in the top 5 of the company, work closely with Elon and Peter Thiel and many others. So as they look for funds to invest in, those are people that are experienced and very good network. I think is one thing in the past, I've done more direct deals, even though in the last 6 months, it's more kind of introducing families to funds. But in the past, it's just like any venture, any deal that we look at investing in on the direct investments. You look at the founders, you look at, is this the first rodeo that they've been in? You look at, most families want some revenue, doesn't need to be in hundreds of millions, but they look at the backgrounds where they have early exits, the product, the crowded space. A lot of people get scared because of the biotech and FDA requirements, but I think when you look at Richard's company and others, there's reasons to be excited about those spaces. So depends on the family, depends on what they're looking at, investing in funds or direct deals.
And strictly with respect to legal representation, how often do you find that family offices have adequate either internal or external legal representation looking at the terms of these venture investments?
Yeah, most of them do. I mean, they have to. I think one of the biggest challenges we all face is just to due diligence on a lot of these projects. I have to, as an attorney, be very cautious in deals, and everyone's deal is the greatest deal in the world. So I have to be a little bit more skeptical and not just listen to what a person is saying, but actually the results, and look at the team and do background searches and get the referrals and other things. One of the challenges we have in the private marketplace is just getting those verified financials, and just really, I can't say enough about due diligence. It's something that we really emphasize. These days, I think it was Jeff or others that mentioned earlier, we use AI, but we do a lot more just kind of private discussions, and hopefully can use Sitco or others in the future to help with that, because you just can't do enough due diligence, especially, for doing, we just had one company getting 70 million, another one's getting 41 million, another one's getting a venture that just got 2 million. So the bigger the investment, the more due diligence we do. Smaller investment, we still doing it, but maybe not as pronounced.
And have there been any changes in the last year or two to the typical legal terms for venture investments that you think families should be aware of?
Well, a lot of the work I do is on the IP side. I bring in my venture team, my private equity team, my M&A team for corporate. I'll just say on the IP side, it's just, I think Marty mentioned it before to Richard, there's certain areas that are more prone to getting patents. In Richard's space, it's ripe for the patent area, so it's an intangible asset, helps with valuation. the AI space, which I think is part of the question that you mentioned. We work with Google, work with many companies. OpenAI is one of our biggest clients, so we get them patents and do a lot of trade secrets. So in that space, what I'd say is maybe 5 or 10 years ago, we got more global protection. These days, we still do patents around the world, maybe less in China than we did because of the theft issues and just the concerns. But we're doing a lot more trade secret just because it's not publicly available. And it's just where the technology is the value proposition for especially all these early stage companies and emerging growth companies, we really protect it very strongly.
And then I'd be interested in everyone's opinion on this. Maybe, Michael, you can go first. How can families improve their visibility into and access to high-quality venture funds?
Sorry for Chris. You have the money. Ask. And the reality is, listen, capitalism wasn't that hard from 2012 to 2021, right? It just like everyone was putting coins into the machines and putting money back out. Then DPI stopped. Let alone this, the stock market's up 25% over the past three years or so, but no M&A, no IPOs. But like, where's the DPI? It's like all of a sudden, wait, you invest in us to make steaks, but now you want that in a microwave degree. We're a 10-year asset class. So my answer is just ask if you want access, because you probably get access easier than ever. If you're looking to get access into the top 6 franchises that raise somewhere between 51% or 43% of all venture capital money over the past couple years, that might be tougher. You might get access to their 7th string, like their clown fund or something versus the general. But it's, from what we've seen, is family offices, and we're blessed to have people like the PAGS Group, Steve Paliuk out of Boston, State of Connecticut, Kevin Plank, founder of Under Armour. Most of our LPs are family offices that are entrepreneurial, and there's a network of it. But when we get reach outs or shoulder taps, we happily do that. So we're big fans of curiosity and just asking, put it out there.
And Oscar, what's your perspective on that? How do families get access to the best venture funds?
I think it's networking, knowing somebody that knows somebody. But I also want to make, the comment that I think is currently families or any LPs is fighting more for quality. So I think finding the right fund is more challenging. I think that's why I mentioned maybe network is a way to get to the right fund, because there's no doubt about it that I think, based on data, there are less LPs, but the LPs in investing at this moment, but the LPs that are investing are willing to do largest check sizes for the right fund. So how you get to there is to connect with the right fund through connections and attending to events like this, I think, to get to know those funds.
And Oscar, when you think about the companies that you're investing in, I mean, if there are families that want to do direct investing, how can they most prudently select from all these types of companies that have technical issues, regulatory issues, in addition to the standard businessy issues? How do they best approach that if they want to do direct investing into those types of companies?
Yeah, so direct investment, we sometimes offer these through SPVs for some companies that don't want to do the investment in the fund, but rather in the company. But still, I think they can get to those direct investments. But I think my advice and what I believe in is that you do it through domain expertise, whether it's that the family office or LP has that domain expertise, or go through the firm or fund rather with that domain expertise. Like in our case, we are very knowledgeable in medical devices. Within life science, medical devices is what we understand the most. So whenever an LP want to not be in the fund, but in a particular company, they can do it through us because we got an edge when we see a company as an opportunity. But if they do have the edge, they could, that's my advice, go with something that you either know or the person that you're investing through knows that space. That's my take into it.
Michael, your thoughts?
What we've seen from the group is, we're really early stages. We've gotten some family offices that have come into our fund and either mandated us, we want to do co-direct, we want to do direct as well. And we've done SPVs or put them directly on the cap table, the ones they're interested in. I mean, we're only U.S. consumers, so that's our strike zone. If someone asked me about biotech, it'd be like no habla inglés on that. And then family offices tend to, we put our LPs in touch with one another. And so there's others that, you know, we have people from Goldman and other places that put money. So it's like, how do I get into that? And then with the rise of secondary, listen, SpaceX has done 27 secondary rounds. And that 88% of all companies that are $100 million in revenue or more are private. We're seeing a lot of private activity where, quite frankly, I believe family offices are the new asset class. We've seen a seismic change in the past 8 to 10 years at the seed stage, especially where we see a family office might put in the largest check, but they want an institutional, which we qualify for to do the work. And so there's a reason why the Apollos and the Blackstones and the JP Morgans have really doubled down to kind of combine some private wealth and some investment banking mechanisms is people want more access to it. And with companies staying private longer, you know, there's I think 30% less publicly traded companies today than there were 25 years ago. It just, how do you get into the private side? Because good entrepreneurs on the private side can get better deals than the market can give. So we're seeing that, to answer that question, it makes sense that people are wanting more and more. It's only going to continue. But I think we're going to see for all the super aircraft carrier funds that are out there, there's a return to cottage to get into certain funds that have a sector expertise and then have that as part of the LP agreement.
I think just how to source deals or how to get deals. Again, Marty is terrific. Known him for a number of years, and just the connections to the families and those, just a lot of private deals. But Oscar is in Boston, so for DARPA, I just spent a week at Mass General Hospital, a group Oscar called CMIT. They're doing some amazing work there. Many of you remember the tragic events of the Boston bombing a few years ago. The doctors, the president, and the leadership of the hospital came down, met with us because I was wearing my DARPA government hat then. And they talked about how the whole floor was full, unfortunately, with amputees and the amazing services that they provide. They work very closely with Walter Reed. So they were able to review with us their latest technologies, and they're like a university where they're looking at spinning out a lot of these technologies that I bring to the family offices and the investor community. So some exciting technologies since I was in the military. Unfortunately, there's a certain amount of amputees involved. The prosthetics, the brain-computer interface technology is really off the charts. What's personally of interest to me, Marty knows I'm a big basketball fan and still try to be athletic, is exoskeletons. There's some defense technology that is not dual purpose, but when it comes to the human body and the healthcare side that, you know, Oscar mentioned he's working on a life science, there is dual use. So where it may be very effective for the war fighter, which we're very interested in, it could be also beneficial to a person that still wants to play basketball, although...
Is this about your vertical leap? Is that what
Yeah, I want to dunk, but I don't think it's going to happen anymore. But exoskeletons is an area that I'm particularly interested in and in other areas. And then, so that's a lot of deal flow. On the private side, I can go in other deals. But one quick thing about DARPA. Last week, I was in Silicon Valley. We work with SRI, work with Park Labs, you know, Xerox, the original ideas all behind the, you know, the mouse and computer interface technology and so on. So from there, they have 5,000 employees, 75% of which have PhDs. So they are just constantly working on new innovations, and it's amazing for me to see, very hopeful. And they're working closely with the government, which as a citizen makes me feel very good.
And Micah, you've touched a little bit on liquidity already. What should families expect going forward in terms of liquidity out of venture? And is anyone thinking creatively about exits other than, you know, M&A and IPOs, which, you know, for the moment is still on the sort of a back burner?
Oh, I get the fun questions. You know, we have a couple of funds. One, we had a 2011 fund, returned to 7x net, Peugeot small fund. We have a 2017 that's at a 2.66. It's probably going to return a 3.4, 3.5, and we've done 3 distributions on that side since 2017. We have a 2023, which has got 0 DPI on that side of it. So one of the things we say, I go, think of it as the alternative asset class. When you put money into us, don't expect to see it for 10 years. And I'll be clear, we're European waterfall. So I don't see a dime as a GP until you all do. And that's just, to me, alignment of interests on it. Going back to historically to truly answer your question too, is we had Peloton. We actually got up for the IPO. We did a secondary. We did a 22x in four years. We've had IPOs. M&A, I think, is coming back strong. And it's strong in a smaller way. It's not like capital H headlines. When you're a consumer and you're trying to get in before a $20 to $25 million valuation, we've had companies sell to Mars, Mondelez, and Bayer for 230, 410, 425 respectively. And the smallest return we had was 5x when we did with QSBS. Those are nice 7 irons that go straight, but we're talking about big Bertha stuff in venture now. And so when you see venture investing in OpenAI at a $340 billion post money, it's just like that's one end of venture. But our end, we're seeing more and more M&A and more secondary. I think secondary is absolutely part of our new strategy going forward, which we're in the midst of figuring out in a smarter way, because it just people want liquidity, without a doubt. But right now, we're not built for liquidity. You can't press the button. You can't get a steak out of the microwave that's any good. And so we're probably not the best way of getting it.
And Oscar, talk a little about your perspective, your historical exits, if you'd like to, but also, yeah, are you hearing any creative or inventive ways for people to get liquidity out of funds that historically weren't there?
Yeah, that's a good question. And I think it comes up very often. In the case of medical devices, it's a 10 years, plus 3 years if the market conditions are not ideal. You don't exit, but it's the typical 10 years term. However, the secondary market is there, so that is applicable to all VCs, and there are people out there that can buy those positions, and people can get early. The other thing that is important to mention is digital health. Software as a medical device or any device that has some sort of AI integration. Whenever there is a software, there is typically a chance to have a exit sooner. So software as a medical device, you might exit sooner than 10 years. So that's also another way to look at it. But regardless, VC is a long-term investment, and I think that's how we present ourselves. People that invest in it and understands that that's the typical life cycle. But there are options out there.
Okay.
So just on a liquidity standpoint, the exit opportunity, I chair the med device team at the firm. So we see a lot of deals. What Oscar said is I agree with. But there's exceptions. If you look at the two individuals, Richard and Shrifal, with AngioSafe, one of the big things the investors look at is the exit opportunity. So if there's FDA approvals, both gentlemen said within the next year. In this case, I think Shrifal said this September, the opportunity is going to be much closer. So those are things that we definitely look at. Obviously, as you get closer to the FDA, it's exciting. I'm going to give a shout out, even though he's on his iPhone there, to Adam, because we have some nicotine deals. If you look at the tobacco industry, one thing I'd say is a lot of people are turned off by it, including myself. My biggest thing as my 4 kids was to make sure they don't smoke and that they don't do any vaping. Succeeded 3 out of the 4. The 4th one, I broke his leg, so he finally got off Zen. But anyway, my point, if this founder of a nicotine area got me into it a year ago, and I've learned a tremendous amount of the complete disruption going on in the tobacco industry to just nicotine products that are still not the best for you. But when you look at the tobacco causing cancer-related aspects of it, going to nicotine, there is a multi-billion-dollar shift going on. And when you start working with these big companies, PMI, Philip Morris, Altria, the Juuls of the world, other companies, Juuls is, let me put that to the side, but Japan Tobacco and others, one thing they all have in common is a multi-billion-dollar, in PMI's situation, $250 billion market cap that want to buy technology and want to buy deals. So I have IP technology companies that we're in deals right now that are going to be extremely lucrative exit opportunities. So although this is not an area that people get excited about because of the history, and if you're old enough, you remember people from the tobacco companies putting up their right hand in Congress. This area is going through major disruption, and for those of investors willing to take certain risk, I'm excited I got into it.
So we have a deal for you, and it's outside our strike zone, and because there's a B2B component, but not everything has to be, wait for it, AI. That is, you're almost apologizing for saying that. Like there's a number of startups we're seeing now, they're trying to not finger wag, like, don't do it. It's like, how do we wean you off it? Like Zyn has exploded. Zyn is, I think, 95% safer than smoking on that side of it. So if you're going to do nicotine, you have it. What are the different ways to do it? Because we as consumers, we're irrational creatures. You know, and you look at the barbell going on. When Mr. Nasm was speaking earlier, which was such a treat, talk about longevity, all that. That's absolutely true. And at the same time, when you see a bomb go off or tariffs go up, you're getting that drink on a Tuesday you swore you wouldn't do. We want to live longer, but right now we're kind of like in this, like we want to extend and make it better. We'll take an Ozempic. Yeah, maybe there's gonna be pancreatic cancer later, but like the now is in there in this side.
Yeah.
So that area is super, super fruitful, even though it isn't as cool as saying AI and some of the tech
Yeah,
things.
and maybe one more, then I'll jump to Oscar. Many of you have read about the Olipop deal, or actually the Poppy deal to Pepsi for almost $2 billion. The functional beverage space, the energy drink market is another area. It's going through a lot of disruption. Forgive me, but I brought up it's called Kinetic Energy Drink, ketone-based drink that I invested in 5 years ago. It's a no caffeine, no sugar, ketone-based drink that make around $15-20 million this year in revenues, and that we're raising a small round. But basically, we've been told by all the big companies that if we get to X, which is not too far away, that we're going to have a really positive exit opportunity. And the recent deal with Poppy only helped that argument. And there's, I think that in addition to the food space, where there's a lot more health alternatives and people actually focusing on what they're eating and so on. Dr. Mark Hyman is big into that anti-sugar. You know, we see a lot of value proposition on that, and something we're really excited about.
Lawyer and marketer. That was very impressive, by the way.
Oscar, when you think about your space, medical devices, life sciences, what has changed in the venture world over the last year or two that maybe is not appreciated by typical LPs?
Well, I think in general, before diving into the VC, I think everyone has seen it that the growth of AI in medical devices hasn't been the exception, but I don't think to the same scale. But from 2023 to 2024, the growth of value of deals was more than double. And from 2024 to 2025, based on current data, it seems to go in the same direction. So there's a growth there. There has been a shift, and we've seen some of that in medical device startup companies, not in the same magnitude, but an increment is there. I think FDA, from the regulatory perspective, has made good progress. Most recently they issue guidance for the life cycle in submission of devices containing AI. So there is, and still a draft document, but that is the direction that is going. And if I dig deeper into the medical device itself, I think anything that prevents a patient from going to the hospital, and any device that in essence is doing that, I think is something that we're seeing more, and I think makes sense, because I think those are the companies that are likely to have a stronger position, from the revenue perspective, for instance, those are type of companies that the revenue coming from insurance are likely to survive, due to changes. Anything that, will save money, from not going to the hospital, those are the devices that we're seeing more, preventive healthcare, if you will, or anything that is monitoring the health of the patient without going to a hospital or to a doctor. So those are more of the changes that we're seeing, but I think are driven by, what is out there in terms of what companies could survive from the revenue perspective. So those are things that I think are changes, and even those that I mentioned, the remote monitoring or even the prevention, early prevention, some of it are driven by some sort of AI, whether it's as a tool integrated into the device. So it is all going in that direction.
And about half of the biotechnology deals that have been done in the last 6-12 months with big pharma or big biotech have been products coming out of China. Do you see the same potential impact in the medical device space, i.e. devices coming out of China to be licensed or sold into global players?
I personally don't see that often as a trend, at least in the medical device. We focus only in U.S. companies, but regardless, we receive many pitch decks, and I cannot say that that's the trend, at least from the devices perspective. Many of the companies mostly are, coming from U.S.
And Michael, what can families bring to the table in terms of value creation beyond capital? Are there, or would you rather they didn't think that way? But in terms of like networks or knowledge, what would you like to see your family offices trying to do to help you and they create value faster and bigger?
Well, first off, we work for you. So if you're bringing money to the table and there's expertise you want to bring, we'll happily consider it. We will also say, no, that doesn't make sense because I'd rather not like you. I'd rather have you not like me for the things I say versus sign the contract, then we're not doing the things we're saying later. So part of it comes with the territory. I mean, the big thing that we've heard from family offices is we want co-invest, or we have a distribution, or we have access to this. And we will, most of the time, say we'll do our best or say yes to certain things and get on the cap table. But the interesting thing, it's not around your question. In the past 2.5 months, we've had 5 family offices reach out to us with new ideas. So we're seeing, because of the networks or the expertise, especially of how a family office may have made money or preserving their wealth, we have a new idea. So we saw one 3 weeks ago. It's a protein coffee coming out July 1st. A family office out of Long Island actually hired our marketing group to create a new golf brand that we're doing a huge SPV for starting on Monday on that. So family offices who tend to be entrepreneurs at somewhere in the ecosystem are now going on offense with some of the ideas, is what we've seen. So that's where our marketing side has been attractive for the quote unquote proprietary deal flow on that. So family offices, and there's some family offices like set it and forget it. Like they're making an assessment, do I want to be with you for the next 12 or 16 years? But more and more we're seeing, and it's a generational shift. We'll especially see it if there's a female, a daughter involved, since we're heavily in consumer products, and 85% of purchases are made by women, not the 3 of us or 4 of us on stage here, right? So it's interesting how it's attractive. So we're seeing family offices want to say, can you help me launch this brand, or what do you think? So that's probably a little bit of an outlier.
I was just going to add to that. What I see with family offices, and it's encouraging, is there is a lot more work with city, state, and federal government. I don't believe in a deep state, but I know from DARPA alone that we bring a lot of deals and there's co-investment opportunities. Anybody in the family office business, it's very rare that, unless the family is very wealthy, but even in those cases, normally it's a syndicate of families that do the investment. So you have a lead investor out of the family that will lead it. A lot of the stuff on the defense side, especially, something I didn't see just with the nature of the world these days, there's a lot more kind of co-investing in defense-related technology, whether it's, as I mentioned to Jeff, whether it be Anduril, whether it be Perplexity, Will there be that? There's just a need for that. And one of the companies that Marty knows, has spoken at early investor meetings, they make small molecule drugs, technologies in the United States, and then that same investor, Dr. Jeffrey Ling, is making large molecule drugs in the United States, biologics. Some of these drugs are going to be very important if we have certain unfortunate situations that we don't want and don't expect, but we have to prepare for. So a lot of the families are working with the government, not against them, maybe years ago, and seeing some of these deals that are private, but very important, and so on. The other thing I'd say on the healthcare space, I have a lot of deals in the cancer space, just families are affected by that. We're doing a number of co-investing opportunities with, say, various states. If you look at the state of Texas, they have a program called CPRIT. There's a $5 billion program to invest in cancer-related technologies. They're going to do another $5 billion, and then they're going to do a separate $3 billion program for Alzheimer's research. So those are things we as much as we love investors and family offices, we try to team up with, get some non-dilutive capital from the state or federal government, and normally, if those deals get funded by the government's also going to become a client from a revenue standpoint, which helps the value proposition. So that's what we do a little bit of.
Peter, I just wanted to make a comment. So Jeffrey Lim, the reason why he is so important is because I believe that every off-prescription drug in the United States touches China in one way or another. And we found that as the negotiations go on, for economic negotiations, that China does a lot of slow rolling of pharmaceutical elements back to the United States when that occurs.
Exactly, yeah. As Marty mentioned, if you look up this gentleman's name, I think Elizabeth, she's here. She met Dr. Jeffrey Ling, Ling, 30 years, 6 tours of duty, MD, PhD. He talked about a company, On Demand Pharmaceuticals. We learned through his presentation 3 years ago, 80% of the resources for making drug in the United States come in from China. So when he was a surgeon in Afghanistan and Iraq, when he needed certain drugs, he says, I'll make our own technology, and that's what an example of what he's doing, so we don't have to rely on China. So
and also when it comes to spending on defense and cyber, that's in the family office space. That's primarily been out of Polsinelli's headquarters, like that area of Texas, Oklahoma. Those are where the family offices are more active, and then maybe a little bit of California and Florida. But really, it's a great opportunity today for family offices to get more active in that space than ever before because there's going to be so much spending.
Yeah, real quick, cyber, you probably reviewed, familiar with the deal Wiz, where they initially were going to sell to Google, I think, for $20 billion, then a year later, they sold for $32 billion, working with the FBI and Israel and others on the technology used in New York for the cyber system. It actually came out of Israel. You probably know about the Iron Dome that we're working on in the United States, which I fully support, and I think it's a great idea. If they can protect New York first for historical reasons, I'd appreciate that. But yeah, those are things, cyber, Marty's exactly right, AI, et cetera, is going to be very critical.
And Oscar, since we couldn't avoid the topic of AI, how are you using it in your business, either to assess potential investments or operationally, or maybe even marketing the fund?
I think all of the both. I think, you got more insights into the particular, technology that every company is doing. So we use the tool just as many other topics to research more about that particular technology. So there's great insights that we use from that perspective. And I think, marketing applies to not only VC, but I think to other industries. But I think, it's a great tool that is applicable to across all sectors, not exceptions in the VC.
Michael?
I'm going to speak out both sides of my mouth. I love AI. This is game changing. It's amazing. At the same time, it's overhyped on LinkedIn because I think everyone wants to be the smart person at the cocktail party or not look stupid. what's going on with workflows inside. So as a consumer investor, I don't want to touch it for the most part. We just did one in a vitamin deal that can bring stuff to market in 6 months versus Bayer and the others that need 3 years because we took one from Bayer, which is why we're doing it. But the consumer applications aren't going to be there versus some of the workplace productivity. The biggest adopters of AI over the past 6 months, 12 months have been companies, 250 people at $9.99. Second most is 100 to that 249. It's amazing. I'll go a little bit off menu. Like one of the things when you sent your list of your questions, so we all created like AI agents and LLMs where we're spending all the time. I put your questions inside a pre-programmed thing that says, answer these, we're bullish, we're this, that. Do it with the sage wisdom of Warren Buffett. Do it with the expertise of Don Valentine. And yet, what am I not saying like Arthur Rock? And so I get all these quick answers. And then and again, I'm not a tourist anymore, but this is my first investment job. I created the company. When I was listening to Fred earlier, this guy's amazing. Like this guy, without him, we don't have MRIs in the world, by the way. And you all know that, I don't. So then I started putting things through the lens. What would Fred say about things like AI on there? And I don't know if hopefully this quote is true or it really shoots me down, but you said the best businesses aren't built in booms, they're built in adversity. That's when the tourists leave and the builders get to work. And you go back to 2015, 8% of all venture dollars were going towards AI. Q1 of this year was 74%. Last year was 51%. So my job in venture, and I'm gonna say me or we, our job is to like kind of see things before they happen because we're power law. And the great thing is we could be wrong 80% of the time, as wrong as we're really right the other 20% of the time. It's the best job in the world. And so that's just how we like views on AI. It is a great thing, but also if you're investing in AI now, be very like, could be great cocktail party stuff that you're in open AI at a $340 billion valuation, and it's going to keep going up. But a lot of those great companies, the opportunity in venture was years before, but it could be another part of your portfolio and your strategy. So that's
One
unique
thing I'd
answer.
say about AI, I mentioned the firm represents OpenAI. A lot of AI companies, if you're a healthcare company that does not have an AI platform, get one because you need one. I'll agree with Michael. Fred, it was a great discussion this morning. And what he mentioned in the healthcare space about aging. So two things that are really exciting to me, because based on my background working on the pharmaceutical side, on drug development side, 10 years ago, 5 years ago, pharmaceutical companies, biotech companies did not want to use AI to review their data. Data is king, still is king, but they're very private. Now there's a lot more AI being used in drug development. Elizabeth, that did a presentation or did the interview earlier today with Fred, she gave a presentation 6 months ago at one of Marty's meetings that talked about AI being used in drug development space. That's really, really exciting, especially for phase 1 and phase 2. When you go into phase 3 in the human body, obviously it's going to change. And then not to freak people out, but I think AI and humanoid developments, I'm a big fan of robotics. I think all of us, instead of having home care, we're going to have humanoids that are going to be hopefully making a good cup of coffee, but also we're going to have them in the house, and they're going to be the servants of the future.
What's the electric bill going to be on that?
Yeah. What was that?
What's the electric bill going to be on that?
Yeah, that's, well, electric, the whole electric industry is going through a lot of changes too, but, Will Smith is maybe be one of his movies, but I think that's, if anybody's seen that, it may freak people out. It does not freak me out. It just says there's only so much, there's so many, with the aging population and so on, there's only so much home health care we can do. I'm the youngest of 9. I think Jeff mentioned there's he's the oldest of 6, I'm youngest of 9, and I see it in some of my older siblings that we're all going to need certain care as we get older, live longer, and so on. And I'm a big believer in that space, and we have families that are very active in that space. And hopefully the humanoids they're looking even more human each day, which is a little bit frightening, but again, I'm excited about it for the future.
Even more frightening, people are creating AI boyfriends and girlfriends. And it's a thing culturally. And it's come out like me saying what you said about tobacco. It's just, these are what consumers are doing. What consumers say they're doing on Facebook is the exact opposite of what they're Googling and putting a perplexity on that side of it. So, Oscar, I'm sure you have far more fascinating things than AI boyfriends and girlfriends on your side, just to segue.
Well, Peter, maybe it's humans are getting more robotic. Maybe there's convergence there.
Yeah. Actually, I was going to add on the kind of topic of AI. I think, from the perspective of looking at technology, whenever there's
You
a
have 5
company
minutes.
that is using some sort of AI, from the investment perspective, we think the medical device, technology, any company developing anything that has AI, we look at closer to the quality of the data, how the uh, what's the input, because the output is going to be as good as the input. So it has to learn from relevant data, and there is a watch out there whenever we're looking closer into a company. And for the most part, people are doing the right thing, but that will have a significant impact into how well the the, the output will be, from the company developing that, medical device using AI and machine learning. So the data that is used to train that technology has to be quality data and has to be properly managed. So that's something that goes more into the technical details, but is important when we are evaluating a company that is using AI technology.
And Michael, what one attribute that a family office might have would make you reluctant to take their money?
If it came with things that we're thinking about integrity or things that we don't do, either we can't back them on it. We haven't had that yet. We've had people maybe like, hey, we'd like to be in our fund and we're about to market our next one. They might want like a 0-0 or something like that. No, I'd rather do a 130 than that side of it. But it's, if there's integrity or they said we have to co-invest in every single deal, do things that, listen, if people are gonna invest in us, it's like we damn well better get performance, because that's what the point is. It's not proprietary deal flow. It's like we gotta perform, and we gotta do the things we say we're gonna do. And that's the thing I think you probably see more of this than I do, is there's a lot of fund managers that didn't do a damn thing about AI in 2022 when they raised their fund that got them huge fund fees, but maybe it wasn't their strategy. Or that's why consumer, which is 70% of the US economy, is dipped below the top 10 investment area, because it's just, everything's going AI. So if we can't do the things that they would expect of us, or it would just hurt us with everybody else.
And Michael, within your scope, what's one or two areas, specific areas that you're most excited about?
From a macro, I mean, we're all, again, irrational creatures, as I mentioned earlier. Our whims are not being like, we want things faster, cheaper, better in some way, shape, or form. I mean, during the pandemic, oh my goodness, the pandemic, everything was closed, and yet e-commerce only reached 27% of all retail. So for all the digital and this stuff we talk about technology, I don't know about you, if I run out of Q-tips, I'm going to CVS. I'm not waiting for Q-tips of the month or subscribe and save from Amazon. And younger people, like if you're born in 2008 to 2020, they want tactile stuff. CDs are making a comeback. It's crazy. We're having an 80s flashback. So like consumer behavior is changing, and I know we're tapped into it more than anything else. So we do the 2 ears, 1 mouth thing. It's like, ooh, look what consumer behavior is doing. And we know that's working for 20,000 hours with the Pepsis and the Anheuser-Busches. Culture changes much faster than corporations. And that's where we're going to keep attacking and investing in. So consumers only get more fun. God bless America. God bless America, Ted.
And Oscar, same question to you. Within your space, is what's one or two specific areas you're most excited about investing in?
Yeah, I think mentioned it earlier, I think, but preventive healthcare and early detection, any companies that are targeting those are very exciting opportunities, and typically those are the companies that we see that they have a stronger revenue projection. And I think that make us excited. Excited about the fund that we're at. We're both doing, as I mentioned, we have 11 companies out of about 25 that we want to get. So we're still actively looking for companies and also raising the fund as well. So that whole thing make me excited. What we have, the traction we have as far as like the companies we've reviewed and the type of companies that we have are very, very, very vetted, and it comes down to those, because we believe strongly on those two things, preventive healthcare. preventive healthcare and early detection.
And Peter, I guess, do you ever meet families and you just think this family temperamentally should not be investing in venture? You ever talk them out of it and tell them to stick to muni?
Guys, we gotta
funds?
close this up. I gotta move to the next
Yeah,
speaker.
yeah, just meet all sorts of people in the family office space, and some just want to do the public investing. Warren Buffett doesn't invest, as you know, in private. So meet them all, but I think you give them one good opportunity to do what they do well. They say, let's have a few more. So it all depends on success. But thank you very much.
Super.
And
Thanks.
and what's the drink again? One more time, just for,
Yeah, kinetic energy drink.
Does that improve your vertical leap?
No, but it helped me. No sugar, no caffeine, so it's good.
Fantastic. Great job, guys. Thanks so much.
everyone.
Thank you,
Appreciate it.
everyone.